Hi investors. The bond market shows stability in the 10-year government securities yield, steady at around 6.50%. Though trading remains subdued, reflecting caution. The yield's tight range indicates limited change, suggesting a market waiting for clearer signals before making significant moves. The Indian yield curve is upward sloping, with long-term yields significantly higher than short-term yields. Short tenor yields are anchored near the policy rate, while longer tenors have risen due to supply-demand dynamics. The spread between short and long ends reflects term premium and investor caution, highlighting the market's preference for shorter maturities amid fiscal supply concerns. The Reserve Bank of India's recent Treasury bill auctions highlighted strong demand, with bids nearly quadrupling the issuance size. Cut-off yields rose slightly, indicating a mild uptick in short-term rates. This robust participation was primarily driven by mutual funds and banks utilizing surplus liquidity, reflecting confidence in short-term sovereign paper despite the slight yield increase. The upcoming government securities auction will gauge investor demand, focusing on the 10-year benchmark reissue. Recent fiscal developments and slight yield pressures are shaping underwriting and bidding interest. Despite these pressures, domestic institutions continue to support primary market demand for central government securities, highlighting their preference for sovereign paper over state development loans, which face subdued interest and higher yields. Investor demand for state development loans is weak, causing states to offer higher yields. State development loan issuance has surged, reflecting increased state borrowing needs. The contrast in demand between state development loans and central government bonds highlights investor preference for sovereign securities as state development loan spreads widen due to perceived fiscal pressures at the state level. The corporate bond market is thriving, with significant issuance and narrowing spreads. Companies are capitalizing on lower yields, locking in cheaper funding. August sees top-rated firms like State Bank of India and Power Grid Corporation raising funds, driven by declining yields and ample liquidity. This trend reflects a strategic shift from bank loans to bond financing, enhancing market dynamics.
RBI released its MPC minutes yesterday. The Reserve Bank of India's monetary policy remains neutral, with the repo rate steady at 5.50% after earlier cuts. Inflationary concerns limit further easing. Global factors, like United States Federal Reserve actions, have minimal impact on Indian bonds.
This stability supports domestic demand, while foreign investors show cautious interest, awaiting clearer signals from global markets. You can refer summarized MPC minutes in description box. Foreign portfolio investors are cautiously optimistic, with modest net buying of Indian bonds. Domestic institutional investors, including banks and insurers, continue to absorb government bond supply, maintaining steady demand. This dynamic supports market stability, despite some reduced duration exposure among banks at the long end. The Indian bond market remains stable with cautious optimism amid supportive macroeconomic conditions. Yield curve dynamics and robust corporate bond market activity highlight investor strategies. Continued monitoring of global and domestic factors will be crucial for future market movements. That was for today from Bond Desk. Please like, subscribe and comment.